Parvez Qazi, who's Executive Director at Nuvama Institutional Equities, who is joining us to talk about defense and railways, Realty versus railways, and understanding the legs, whether this rally is sustainable and justified at current valuations. Parvez, afternoon. Thank you so much for your time. What is the hypothesis of your report, and how are you analyzing this situation? Because nobody is questioning the quality of management or quality of growth or possibilities, but valuations is something which people are getting a bit jittery about.
Good afternoon. So you said absolutely right. There are no doubts about the quality of growth, especially in the railway space. But yeah, I mean, valuations are something which are some cause of concern even now. Now, in fact, even there are two ways to look at it. Near term, obviously, valuations seem a bit stretched, especially when you look at the trading history of many of these stocks. Most of these stocks are now, in fact, trading at valuations which you have never seen in their history. But at the same time, the counterpoint to that also is the kind of growth prospects that you are witnessing in the railway space are also something which we have probably not seen. Many of the growth opportunities that we are witnessing in the market were probably never even there in the Indian context. So, for example, if we look at passenger rail rolling stock manufacturing, the opportunity in the case of Vande Bharat was never there. Historically, most passenger coaches in India have been built by Indian Railways themselves. So it is for the first time that such an opportunity has kind of emerged in India. And at least our hypothesis is just like we saw an emergence of whole auto manufacturing ecosystem a couple of decades back in India, we are likely to see something similar with the railway rolling stock manufacturing also going ahead, especially over the next decade. That is probably one of the reasons why there is so much bullishness in this stock. So yes, in the near term, valuations do remain very expensive. But yeah, I mean, if one has to take a slightly constructive view over the next 5 to 7 years, there are justifiable reasons why the market is so much excited about these stocks.
So which to your mind is the most inexpensive side of this sector?
Um, so in this kind of market, frankly, it is difficult to find inexpensive stocks. But yeah, I mean, I would say probably some of the railway EPC stocks haven't really seen that kind of an up move, which we have seen in, let's say, railway rolling stock manufacturers, etc.
Right. Parvez, this is Vinny joining in the conversation as well. And switching gears, let's talk about the realty sector as well, right? And the real estate space. Because obviously, when you look at it, Nifty Realty outperformer on a YTD basis, all the stocks have also seen a fabulous run up, whether you look at it in terms of a Prestige, GLF, Mahindra Life Spaces, all these names have seen a good run up. What is your view on the real estate space? Is that similar, when you look at it in terms of the trend? Is it done, or should we still expect a run up here?
So from a valuation perspective, most of the real estate stocks are now trading at par with their NAV. Further valuation re-rating looks difficult in the near term. The kind of upside that we'll see in most real estate stocks will be, let's say, 20 to 25% on an annual basis, because that is the kind of annual pre-sales growth that most of these companies will deliver. Next round of valuation re-rating is still some time away and might come when the interest rates actually get reduced, and which is probably at least an year down the line in our view. So for the next 1 year, you will see only 20-25% kind of returns in most of these real estate stocks. Having said that, for at least the next 3 to 4 years, we will continue to see a bullish housing cycle, and therefore most of these stocks will continue to do well over the next 3 to 4 years.
Also, just in terms of keeping it with that infra side, then, and what about something like the cement names? Is there anything exciting that you would be looking at as well, given that the monsoons is not as much as it is normally as expected? So obviously that is a positive that comes in for these cement companies. There was a channel check which was suggesting in terms of price hikes in September as well. Your view on the cement pack?
So we continue to remain neutral on the cement space, while clearly for FY24 volume growth will remain very strong since it's an election year. Over the medium term, with the kind of capacities that are coming in this cement space, you're unlikely to see too much price action. Now, yes, it is true that September has seen some bit of price uptick by cement companies, but you also need to see that that is coming in the backdrop of stagnant cement prices over the last almost 1.5 year. So yeah, I mean, it will provide support to margins for September and maybe in the near term. But yeah, I mean, medium term outlook remains kind of neutral. We'll see good volume growth, but unlikely to see too much of pricing uptick.
Parvez, real estate stocks, there is one variety like Lodha, yes, Oberoi, even Rustomji for that matter, 60, 70 time, 80 time forward. There's also another variety, mid-cap, mid-tier, Man Infra, say Ajmera, some mid-tier other players which are not so much, but the volumes data shows that they are also showing good growth in earnings. Are you going down the market cap curve now? Is valuation becoming a challenge in the top tier realty or not yet?
Probably not yet. I think the time for these small cap real estate stocks will also come, but at this point in time, and especially considering the ongoing trend of consolidation in the real estate space, investors still continue to prefer the large cap names. Having said that, as we said, the housing cycle is likely to remain strong for the next 3 to 4 years. So yeah, I think couple of years down the line, the time for the small caps will also come. Especially as you rightly said, valuations for the larger stocks are kind of becoming a challenge. So yeah, people will go down the size as the real estate cycle continues to deliver well.
And Parvez, lastly, on any of these names, whether you look at the infra cement side or the railway side, yes, you did mention a few names in the railway, but what would be your top picks coming in here?
So our topic in the railway space continues to be Tata Guard Rail Systems. In the entire railway space, as I said, the best opportunity remains in the railway rolling stock space. And Tata Guard currently is the only company in India which has presence in both the wagon space as well as the passenger manufacturing side. So that continues to remain our topic in the railway space.
Right, Parvez, thank you so much for joining in with us, giving us an understanding in terms of, what we should be expecting from these sectors going forward and your views and topics as well. Thank you so much, Parvez, for joining in with us.